Hello students, hope you all are fine. In the last class, we have completed the chapter Budgeting and Savings. Today, we are going to start with the new chapter Fundamentals of Banking. We'll start with the definitions of bank. A bank is an establishment which makes to individuals such advances of money as may be required and safely made, and to which individuals entrust money when not required by them for use. This definition is given by Kingsley. Banking means the accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and withdrawal by check, draft, order, and otherwise. This definition is given by Banking Regulations of India. So, we can say that a bank is an institution which accepts deposits from the people and in turn advances loans by creating credit. On deposits, bank pays interest, and for lending money it charges higher rate of interest. The difference between the two is the earning of the bank. The rate of interest varies from bank to bank. People usually use banking services for saving their money and earning interest as a part of investment and also to make safe transactions. Now we are going to do the functions of bank. First main function is receiving deposits. It is the primary function of a bank. A bank accepts deposits from the people for the purpose of making investments and granting loans. People deposit their money in the bank for the sake of safety and also for sake of earning interest which is paid by the bank. Thus, banks are both borrowers and lenders of money. Depositors can withdraw their money from their accounts in the bank either in the form of cash or checks. Second main function of a bank is lending money. A bank lends out the money which it gets in the form of deposits from the people. A bank lends money to traders, businessmen, agriculturists, etc. for short periods. Bank usually lend money in the following ways. First one is cash credit. The bank allows the borrower to borrow up to a specified limit. The amount is credited to the account of the customer, and the customer can withdraw this amount as and when required. Interest is charged on the amount actually withdrawn. It is usually granted on a bond or against some other security like fixed deposit. Second one is loans and advances. A specified amount is granted for a specified time period like for 1 year, 2 year, 3 year. However, interest is charged on the full amount of the loan. Loans are generally granted against security of certain assets or in a personal guarantee. Third one is credit drafts or overdraft. A customer who is having a current account with the bank can withdraw more than the amount standing to his credit. This is a temporary arrangement on which interest is charged by the bank. It may be allowed on the security of assets or on personal guarantee. And the last one is discounting of bills. In this, bank pays the payment against the bills before the date of maturity. In case the bill is dishonored on the due date, the bank can recover the amount from the customer and charge some commission for this service. Now, the other agency functions of the bank. Banks render several services as the agents of their customer. These services are known as their agency functions. First one is they transfer funds from one branch to another and from one place to another as per the instructions of their customer. They make payments like installments, interest, insurance premium, taxes on behalf of their customers. In addition to making payments, they also collect payments like dividends, interest on shares, debentures, rents on the behalf of their customers. They buy and sell shares and securities on behalf of their customers. They act as the agents or representatives of their customers for other banks and financial institutions within the country and abroad. And banks also issues demand draft for customers on their request. Next one is other miscellaneous functions. Besides the above discussed functions of the bank, they also provide several services of general utility and miscellaneous nature, not only to their customers but also to the public in general. They are as follows. They provide safety lockers for the safe custody of their jewelry, valuable documents, and other precious possessions of their customers. They issue letters of credit like circular notes, drafts, and traveler's check which facilitate the customers in the purchases of goods in the distant places. They provide correct information to the customers about the credit of other customers. They give references about the financial position of their customers when it is so required. And lastly, they supply various kinds of trade information which is needed by their customers. So these are the various functions performed by the bank. Next is the classification of bank. The bank has been classified according to the main functions performed by them. There are different kinds of bank: commercial banks, exchange banks, industrial banks, agriculture banks or land, cooperative bank, saving banks, indigenous banks, mixed banks, export import banks, and central banks. Deposits are accepted in these banks in the form of fixed deposit, savings bank account, recurring deposit account, and current account. We will discuss this in detail. First one is fixed deposit. In fixed deposit account, a lump sum amount is deposited in the bank in the form of check or cash for a fixed period of time. Time may be 6 months, 1 year, 2 years, 5 years, etc. The interest earned on the fixed deposit is much higher, that is 6 to 8% as compared to the saving accounts. The rate of interest also depends on how long a person invests his money for. We cannot withdraw the amount until the period is completed. In case of emergency, if the amount is withdrawn, the interest paid is lesser, as we agreed upon. The period of investment is called as term. No checkbook or passbook is given to the customer. Only FDR, that is fixed deposit receipt, is given to the customer. It's having name and address of the person, amount of deposit in figures and words, date of deposit, period of deposit, interest rate, terms of deposit, name of branch, type of deposit, maturity date, payable to whom, maturity value, and 11th one is signature of the manager. This is the receipt provided by the bank to the customer. And when the FD matures, you have to produce this original FDR to the bank, either to transfer the money into your saving account or bank will renew your fixed deposit. Next one is the saving bank account. In saving bank accounts, the bank will give interest to the depositor, but there are certain restrictions, like the account is opened for a non-trading customer with an initial amount of rupees 1000. But the amount varies from bank to bank. The main of this account is to develop the habit of saving. Such an account can be opened by one or more person in joint names. The account holders are allowed to withdraw money in the form of check by using their ATM card, internet banking, that is e-banking, or by using withdrawal form. Withdrawals from this account are restricted to 2 to 3 times a week. In order to deposit, the customer will get a pay-in slip that is filled by the depositor and handed over to the bank cashier. A passbook is also issued in which transactions relating to the account are recorded from time to time. Interest is paid on minimum monthly balance and credited to the respective accounts yearly, half yearly, and quarterly depending on the bank policy. Next one is recurring deposit account. This scheme has started to encourage savings for those people who cannot make large deposits. Recurring deposit can be opened with a small amount over a specific period of time and they have to pay monthly installments. The number of monthly installments may be 12, 24, 36, and so on depending on the need of the depositor. A passbook is issued to the depositor showing the installments deposited by him from time to time. There is no checkbook as he can't withdraw money from this account. The amount can be withdrawn only on the closure of this account. If the amount is withdrawn before the expiry of the specified period, the rate of interest paid by the bank is applied on the basis of period the account is maintained for. Next one is current account, in which the money can be deposited and withdrawn at any time. It is generally operated by the business houses and the minimum deposit of rupees 5000 is needed, which varies from bank to bank. In these accounts, there are no restrictions on the number of withdrawals, but the minimum credit has to be maintained in this account. The bank will not pay any rate of interest on this depositing. In fact, the bank will charge on the number of transactions we made through this account. An overdraft facility is also available to the account holder. So students, today we have covered definition of banks, functions of banks, classification of banks and the services provided by the bank. In the next class, we will be continuing with this chapter. Thank you.